The world of finance is witnessing another significant shift, one that bridges the gap between traditional markets and the decentralized future. Crypto exchange Kraken has officially launched its new platform, Kraken xStocks. This innovative service allows users outside of the United States to trade tokenized versions of major U.S. stocks, including giants like Apple and Tesla. The platform isn't just another trading venue, it represents a fundamental change in how global investors can access a market that was once restricted by geography and time zones. For the first time, a trader in Tokyo or a night owl in London can react to market-moving news about a U.S. company in real time without waiting for the New York Stock Exchange to open. This development is more than a convenience. It is a powerful step towards democratizing access to wealth creation. Historically, participating in the U.S. stock market required navigating a complex web of international brokerage accounts, each with its own set of rules, fees, and operational hours. Kraken xStocks dismantles these barriers. It leverages the inherent power of blockchain technology to create a single unified market that operates continuously. This means that opportunities are no longer confined to a specific 9-to-5 window in a single time zone. The financial world is becoming truly global and always on, and this platform is a clear signal of that unstoppable trend. So what exactly are these tokenized stocks? In simple terms, a tokenized stock or an xStock is a digital token that represents ownership of a real-world share. Each token is fully backed by one share of the corresponding company's stock, held securely by a regulated third-party custodian. When you buy an Apple xStock on Kraken, you are purchasing a digital certificate that proves your ownership of that share. This certificate lives on a blockchain, which provides a transparent and immutable record of your holding. It combines the legal ownership rights of a traditional stock with the flexibility and efficiency of a digital asset. The implications for the average investor are profound. Imagine being able to buy just a small fraction of a high-priced stock like Tesla without paying exorbitant fees. Or consider the ability to manage your stock portfolio directly from your crypto wallet alongside your Bitcoin and Ethereum holdings. This integration creates a more seamless and user-centric financial experience. Kraken is essentially using crypto's infrastructure to rebuild a part of the traditional financial system, making it more accessible, efficient, and open to a much wider audience. For millions around the globe, this is their first direct and affordable entry point into the world's largest equity market. The core innovation of Kraken xStocks lies in its primary features, which directly address the pain points of the legacy financial system. The most significant benefit is undoubtedly the 24/7, 365 trading availability. Traditional stock markets operate on a rigid schedule, typically for about 8 hours a day, 5 days a week. This model is a relic of a pre-digital era. Kraken's platform, however, never sleeps. It allows investors to buy or sell whenever they choose, whether it's in the middle of the night or on a public holiday. This continuous access means investors can react instantly to breaking news or global events that affect stock prices, rather than waiting for the market to open. Another key advantage is the concept of fractional ownership. Many top-tier stocks, such as Tesla or Nvidia, trade for hundreds of dollars per share, making them unaffordable for many small investors. Kraken xStocks solves this problem by allowing users to purchase tiny fractions of a share. You don't need to buy a full share of Apple. You can invest as little as $1. This drastically lowers the barrier to entry, empowering individuals with limited capital to build a diversified portfolio of blue-chip companies. It opens the door for a new generation of investors who were previously priced out of the market, fostering greater financial inclusion on a global scale. Furthermore, the platform offers global accessibility to anyone outside of the United States. For investors in many parts of the world, gaining access to U.S. equities has been a bureaucratic and costly nightmare. It often involves finding a suitable international broker, dealing with unfavorable currency exchange rates, and paying high transaction fees. Kraken xStocks simplifies this entire process. By using a crypto-native platform, users can fund their accounts and trade with greater ease and lower costs. The assets are held in their own crypto wallets, giving them direct custody and control in a way that traditional brokerage accounts simply cannot match. This self-sovereignty is a core tenet of the crypto ethos. When we compare this new model to traditional stock trading, the differences are stark. Old world trading is defined by its limitations: restricted hours, slow settlement times, often taking 2 days, known as T+2, high intermediary fees, and geographic restrictions. It is a system built on layers of middlemen. Kraken xStocks, in contrast, offers an experience defined by freedom: continuous trading, near instant settlement thanks to blockchain technology, lower fees due to disintermediation, and borderless access. It represents a paradigm shift from a fragmented analog system to a unified digital one, where the investor is placed firmly in control of their assets and their time. Kraken is not the first company to explore the concept of tokenized stocks. Other major crypto players such as FTX and Binance previously launched similar offerings. However, those platforms were eventually shut down due to intense regulatory pressure. These early attempts, while pioneering, highlighted the significant challenges of bridging the worlds of regulated securities and decentralized finance. They paved the way by demonstrating the immense demand for such products, but also served as a cautionary tale about the importance of building on a compliant and sustainable foundation from the very beginning. Kraken appears to have learned from these experiences, structuring its offering carefully to navigate the complex legal landscape. What makes Kraken's approach particularly noteworthy is its choice of the Solana blockchain as the underlying infrastructure. This decision is not arbitrary. It is a strategic move designed to ensure the platform is fast, cheap, and scalable enough to handle the demands of high-frequency trading. Solana is renowned for its incredibly high throughput, capable of processing tens of thousands of transactions per second for a fraction of a penny. This is crucial for a stock trading platform, where speed and low costs are paramount. A slow or expensive blockchain would make trading tokenized stocks impractical, but Solana's performance ensures a smooth and efficient user experience that can rival traditional electronic markets. The use of Solana also brings the benefits of a robust and growing decentralized finance ecosystem. By building on a public blockchain, Kraken opens up the potential for future integrations and innovations. These tokenized stocks could one day be used as collateral in DeFi lending protocols, traded on decentralized exchanges, or incorporated into other novel financial products. This composability is a hallmark of open blockchain systems and stands in stark contrast to the closed, proprietary nature of traditional finance. It means that xStocks are not just isolated assets on Kraken's platform. They are digital primitives that can become part of a larger, interconnected financial universe. This strategic combination of a regulated framework and high-performance blockchain technology is what sets Kraken's initiative apart. While others tested the waters, Kraken has built a more resilient vessel. By working with a regulated custodian to back the tokens and choosing a blockchain capable of handling real-world trading volume, Kraken is aiming for longevity. The goal is not just to launch a product, but to create a new, enduring standard for how global securities are traded. This thoughtful approach may be the key to finally making tokenized stocks a mainstream reality for investors everywhere. One of the most critical aspects of the Kraken xStocks launch is its careful navigation of the global regulatory environment. The platform is notably not available to customers in the United States, the United Kingdom, or other restricted jurisdictions. This is a deliberate decision rooted in the complex and stringent securities laws that govern these markets, particularly in the U.S. The Securities and Exchange Commission has maintained a very cautious and often enforcement-heavy stance on the intersection of crypto and traditional securities. By limiting access, Kraken is proactively avoiding potential legal battles on its home turf, while focusing on serving a massive and underserved international market. This geographic restriction highlights the ongoing global regulatory fragmentation. While some countries are embracing financial innovation, others, like the US, are proceeding with extreme caution. For American investors, this means they are temporarily sidelined from accessing these innovative products on platforms like Kraken. It underscores a broader debate about whether current regulations, many written decades ago, are equipped to handle the technological advancements of the 21st century. The challenge for regulators will be to find a balance between protecting investors and fostering the kind of innovation that platforms like xStocks represent. Looking ahead, the launch of Kraken xStocks is more than just a new product. It is a glimpse into the future of investing. This model, where real-world assets are represented as digital tokens on a blockchain, has the potential to revolutionize finance far beyond just stocks. We could soon see tokenized bonds, real estate, commodities, and even fine art all traded on open, global, and 24/7 markets. This would create unprecedented liquidity and accessibility for asset classes that are currently illiquid and exclusive. The friction and costs associated with buying and selling these assets would be dramatically reduced. Ultimately, this trend points toward a more unified and equitable financial system. The distinction between crypto and traditional finance will continue to blur until they are two sides of the same coin. For the average person, this means greater control over their financial lives, more investment choices, and lower barriers to building wealth. While regulatory hurdles remain, the technological foundation is now firmly in place. The genie of tokenization is out of the bottle, and platforms like Kraken xStocks are leading the charge toward a future where finance is truly borderless, transparent, and accessible to all. If you enjoyed this video, please like and subscribe for more updates.